Hello and what is going on, lovely people of the internet? It is Hootmoney here with another video for you guys today. Today we're talking about Progenity stock, PROG. Once again, it's going to be a wild week for Progenity because on Wednesday we have earnings. So earnings always adds a little bit of volatility, always makes things a little bit more fun. We're also quickly approaching that 11/19 expiration where like 100,000 call options are expiring in the money. So we've got about 10 days left to that, 2 weeks left, and it's gonna be a very wild ride. These next 2 weeks should be absolutely insane. Obviously with options expiration next week and earnings this week, it's gonna be a very, very fun one. Anyways, if you guys don't mind leaving that early like on the video, it's very highly appreciated. Subscribe for more content and hit that post notification bell down below next to the subscribe button because we go live every morning, Monday through Friday, and by hitting that bell, you get notified when I go live on this channel. Also, if you guys wanted to check out the trade alerts, you can hit that join button down below next to the subscribe button. But without further ado, let's just get right into it. So you guys can see right here we have Progenity stock. We've got the hourly candles. Also, we have a Fibonacci retracement up there as well because it has been following a bit of this Fibonacci retracement. We're in between the 38% and 50% band right now. Currently, it might look like it's a big drop, but the price action back here got up to $6.47. So it has mostly been underneath the 61% band. That's where most of the price action has been. Now, we tried to tap into that band last week on Friday, and we did not hold that, and we came back down at this Fibonacci band right here, and we were basically just chilling around the 200 moving average pretty much all day today. Now, the first thing I wanted to point out is that you can't really do technical analysis anymore on this stock. I mean, the MACD right here, more weird stuff. I mean, it just doesn't look natural at all, especially that orange line. I don't know if you guys can really see it, but it just doesn't really have any indication whatsoever what's going on. Obviously, if you were going to use this MACD today, we would have got a bounce. It was due for a bounce at market open. We got that bounce, but then it immediately sold off. Kind of like a smaller version of what happened on Friday. Not natural price action. Obviously, on Friday, we had a huge volume spike, and it just got met with a huge sell-off. And it honestly is blatant manipulation. We also got 13 million shares returned on Ortex last Friday, which also scared a bunch of people, which was also blatant manipulation because they've retraced on that. There's no longer that many shares returned, but there has been a little bit of a drop in utilization. We'll get into that in a second. But all I really see as Progenity doing right now is until earnings, I mean, I don't see much of a price move. I think we'll just get more of this sideways action. And obviously I could be wrong, but that's just what I am gathering right now. And just staying between these two bands right here, the 50% and the 38% level. Anyways, if you guys want to check out this technical analysis software, this is WeBull Desktop. I'll throw the promotion on the screen right now. They're giving away up to $2,300 in free stock just for signing up and depositing at least 1 penny on their platform. They're also on mobile devices, so iOS and Android devices. You can use it on your iPhone. You can use it on your desktop, your MacBook, literally whatever device you want to use. You can use WeBull and do a full financial analysis. They've got basically everything you need for technical analysis, financial statements, news, analysts, ratings, level 2 data, etc. You get the point. They have pretty much everything you need in order to do a full financial analysis of the stock. And again, they're giving away up to $2,300 in free stock just for signing up. So you can find those links below in the description or the pinned comment section to sign up. But without further ado, let's just get right back into the video. So you guys can see right down here, Progenity is still on this regulation threshold list. Again, that just means that failure to delivers are happening in this stock. You can pause the video and read what exactly it means right there, but it does mean that there's potentially some naked shorting and weird stuff going on in the stock. You can also see right here that Progenity is at the top of the short squeeze leaderboard. It has the highest score by far. You can see it has a 97.59 score for a short squeeze. The next highest, GROM, has a 92. So, and that's out of 100. So Progenity's obviously got the #1 short squeeze risk, and we are anticipated to beat earnings. As you guys can see right here, the consensus is that we have a $6 price target, and analysts have actually changed their price targets in order for because of earnings that is coming up. They think that Progenity will in fact beat the earnings, which could in fact induce a short squeeze. Obviously, if there is good earnings and there is good value for Progenity stock, then if Wall Street bids it up, then potentially there could be a massive short squeeze, because like we've said before, majority of the short interest has accumulated in the first two leg ups that we saw here, and we can draw it on the chart real quick. Pull up that rectangle, boom. This is where majority of Progenity's short interest has occurred. So any price action that falls above this, anything right here, is pretty much where shorts are still hurting. So we're still in a place where shorts are hurting. So I wouldn't really worry about short squeeze being dead until we drop below like $2.50. That's where it could get a bit fishy. But right now at $3.40, obviously I think we're in a good position. The only thing holding people back from not covering the stock at this point is a margin call. So if we do get a big earnings jump, then potentially they could send it into more margin calls, and we can get a short squeeze in the meantime, and a gamma squeeze, and maybe some more, maybe some icing on the cake as well. But you guys can see right here, there's still 4 outstanding Ortex signals. We got the type 3 with 15 days left, the type 3 with 7 days left, and the type 3 with 1 day left. This one's obviously going to be a profitable signal, and I believe we have this one too, another type 3 with 3 days left. So there's still 4 outstanding short squeeze type 3 signals on Ortex. And Fintel has it at the highest short squeeze risk by far. So everything's the same in that department. You can also see right here that short interest is actually up about 4% today, and obviously we're back to 36.86% current short interest. I wonder why there was such a huge drop down to what, like 23% as of Friday. Now we're back to 36%. Yeah, Ortex screwed up. They did not give us the right numbers on Friday. They had 13 million returned shares. They changed that number to 3 million as of today. We'll look at that in a second, but everything else here the same. Cost to borrow is still very high at 91%. Utilization has dropped down to 96.51%, and we'll show you guys why in a second. You guys can see right here that this was Friday's returned and on loan new shares. Obviously there was 3.6 million returned shares, not 13 million, 3.6. So we got the wrong data, guys. We literally got the wrong data, and they corrected it. They had me looking for an answer. They had me thinking that someone put these shares on loan and they just returned it for no reason. That's not the case. They just got the wrong data. They only even get 85% of the accurate data anyways, and they don't know if a share on loan is actually a shorted share or not. So there's obviously just a lot of things going on, and it's an absolute clusterfuck. But here we have it, 3.6 million shares on Friday newly returned, and then 2.3 that were put on loan, and then again there was another excess of returned shares, and then less shares that were new. So less people are shorting the stock, more people are returning the stock, which could be why utilization is down as of today. You can also see that there are 100,000 shares available according to Fintel, and the borrow fee has been coming down just a little bit from 66 as of 11/4, so a few days ago, back to 61%. Still very, very high. If we look at the short volume ratio, this went up a lot on 11/5. It went up about 5%. It's still been at this almost every single day, but it came right back up as of 11/5. So that was Friday. That was a weird price action that we saw right here, where we boosted up in pre-market and then it came right back down. I wonder why short volume is up, but that's all up to speculation. Anyways, we have the options flow today. We had to do 9,000 premium or more just because of a glitch, but it's still going to show general whale sentiment as side only as usual. You can look at the charts right here. Boom. It was about 94% bullish on today's date, going for the 1217 mostly, so a bit further out, which is good, and the 1119. This is pretty usual, and the $4 strike price as usual. Going to the historical flow, you guys can see there was not as much call option volume as of today, and we'll actually give that a quick refresh real quick to see the fully updated data because I believe, yeah, so it wasn't as much. And this is pretty much the lowest that we have seen in the past few weeks in terms of actual call option volume. So perhaps it comes back up with earnings, but that could be some added volatility dying down. Also, there's so much open interest in call options already that most people are probably fully positioned in this stock. So that could be another reason why call option volume is actually coming down. And you guys can see we have the dark pool. Obviously, it wasn't too bad on Friday, or this was Monday. It was a bit higher on Friday, but we can also see the top option trades, and there was tons of selling of call options, which could have also been an explanation for what was going on today. About 7 out of the 10 biggest option trades today were selling call options. Now, we don't know if they were exactly writing new contracts, meaning they were creating new call option contracts that they were selling, which is definitely a possibility, but you can also just sell a call option contract that you have now made money on, and tons of people have made money on Progenity, and obviously the technicals are getting a bit more iffy now, so it is a decent time to de-risk and sell call options that you have made profit on, especially if you do think that it's going to go sideways or not be as volatile to the upside as it was in the past. So it makes sense. It's not the best for the short-term price action of the stock, but it does make sense why people would in fact do this. There was also the bullish bets were selling of a put option, and then this 1217 $4 strike price call option, as well as this one, a 2023 $5 call option. So that's about it for the video. I hope you guys have enjoyed as always, and if you guys did, kindly ask you leave the like on the video, subscribe for more, and hit those post notifications right down below. We go live every morning at market open, 30 minutes before market open, might I add, and you should definitely join me. We have a lot of fun down there. We do jumping jacks, we do all that good stuff. And yeah, guys, Progenity, not too much right now, not a huge update. Obviously, Ortex got their numbers wrong, of course. We have earnings coming up, and the call option expiration date, 11/19, that's quickly approaching us. So we're gonna have a wild 2 weeks. A lot of FUD is going around. I'm holding strong. Obviously, it still has the best short squeeze risk. Tons of shorts are paying an insane cost to borrow to continue to be short, and most of them have in fact lost money shorting Progenity. So with all that being said, I remain bullish. Obviously, people are de-risking with those call options, which could be sending the price down short term, but in the end, I do think we will still see some upside because we are expected to beat earnings, and we obviously are making these shorts pay an insane cost to borrow to continue to be short. So those are the risks. Those are the catalysts. That's what we got for Progenity stock today. It was a pretty boring day. Not too much happened. A lot of other stocks did take the picture today. Everyone was looking at other stocks, but Progenity is still on the table in my opinion, and I do believe that a short squeeze in Progenity would blow any type of short squeeze out of the water. Any 100%, 200% gains, those are nothing compared to what's going to happen in Progenity. This will be a multi-bagger short squeeze if it does in fact happen, and yes, earnings on Wednesday could kick that off. So if you guys enjoyed, leave a like, join the trade alerts using that join button down below, and that's about it. Hope you guys have enjoyed. I'll be seeing you guys next time. Peace.